what we like to call save and spend. The save and spend system teaches you just that. With your money, you can save it and spend it at the exact same time. And it's a part of the infinite banking process as proposed to us to be able to do by Nelson Nash. Our Nelson Nash himself, God rest his soul, 5 years ago, graduated, as he would say, on to the next great life. And he died at 89, but Jesse is going to die at
120, unless it's in glorious battle beforehand.
In glorious battle. When the Spanish invade, ladies and gentlemen, and they will.
Adelante, pues.
He's going to be ready. Okay, so what we're going to do is talk about your life and your money. If you're out there on TikTok for the first time, go ahead and put a 1 in the chat. We're in South Carolina, and we'd love to know where you are. We're in the northwest corner. It's called the upstate of South Carolina, and all across the country, we help people with the idea of keeping more of the dollars that they make. Your dollars can be placed in a vault, a specific warehouse out there that has no risk, no volatility, and if you do so, you can save and spend at the exact same time. So if you like that idea, go ahead and put a heart and a like somewhere on your screen. Tap the screen somewhere, ladies and gents. Let's go. Give it to us. Let us know you love to be here. If you like, love, or learn something, go ahead and put it right here. Natasha, what's good? Natasha's out there, and she is starting her first set of infinite banking policies. Shout out to everyone who decides to pre-register and join us on Zoom. The Zoom community gets extra features from us on these Thursday afternoon calls, and the reason for that is because we can share our screens with them. But shout out to our friends on YouTube who are live out there at the Cash Compound. Follow us. YouTube, subscribe, I guess is the word. I always forget, Jesse, which ones follow, which ones like, which ones subscribe.
I get it.
You talk through it. Tell them what's up.
Do it all. Wherever you're tuning in from, subscribe there, follow there, like there, of course. The main thing is, if you've not had an introductory view of our presentation, to go to the links in the bio wherever you're at and watch our pre-recorded full nuts and bolts introduction to this save and spend system. And then, of course, this is a great place to be able to allow us to field your questions, to be able to answer your questions, cover your takeaways, and it's already coming in on TikTok, so let me jump over here. Any advice on a remote job? Oh, man, that's a completely different category. Disabled, want to take care of your family as you should. I appreciate that. I understand we do live in a very virtual world. Look at what we're doing. It's an amazing thing.
More power
what we
to
do
you, though.
suggest
Keep the faith.
is no matter what you do, learn how to save and spend the money wherever you earn it from.
Whenever you make it, wherever you make it, keep those dollars. Okay, we're answering questions out there. So, Natasha, I don't have my headphones on, but if you talk to us or put it in the chat, we've got you. Shout out to our YouTube fam. You can always ask us anything on these Thursday afternoon, 3:30 Eastern calls, where we talk about Nelson Nash's idea of becoming your own banker. He called it the infinite banking concept, and without understanding the come from, this particular book, 5th edition, you're probably going to be misled on the internet by believing all sorts of different things out there about what this could be, what products you can use for that, and how to do it, or what it really means. What we did not say is this is an investment channel, specifically. We didn't say this is retirement specific or particular channel, but this is about banking. Banking is, as Jesse likes to say.
That's right. It just exists.
It exists. It's always happening. It's happening in your life right now, but you probably don't control the banking function of your life. And if you did, you would keep way more of your dollars. You could pass them on to your family after you're gone as a legacy. You can also borrow against these dollars income tax free if you utilize the proper tool. So we're going to talk about the proper tool, and the 3-cup setup always does that. So let us know if you have questions about that process right here. Hey, throw it in the chat. Those questions are welcome here. Okay, if you put a 1 in the chat, I'll know. We'll start at the beginning, and I'll map out how you can build your own bank. We'd love to assist you in that effort, and I'm going to walk you through the elements of that bank and why it works, because I'll tell you how these cups in the 3-cup setup operate with each other. Put a 1 in the chat if it's your first time here or you'd like me to start at the beginning. If not, I might just make fun of Jesse a little more. We were talking about Last of the Mohicans. Shout out to Daniel Day-Lewis, wherever he is. He disappeared on us.
Epic music comes to mind. Lots of people even nowadays making their shorts with the music. They're running through the woods and stuff. Oh,
for sure.
Kind of got that Scottish.
I'll get to it in a second. What's up, Jake? We're going to start for Jake from the top. If you don't mind, we're going to walk and talk through it just like this. Ladies and gentlemen, think about the dollars that you made last year, particularly last year. How much of those dollars do you still have? Did you make $100,000? Did you make $100 an hour? $100 a day? Did you make over $100,000? Okay, what we're going to do is walk and talk you through where you can put those dollars. Let's start out with the first I. It's the income that we make. Where do you save it? Where do you keep it? Where do you invest it? Who do you give it up to? If you decide to put those income dollars inside insurance of all crazy places, stick with me. Stick with me now.
Yeah.
Don't get nervous.
Be
We're going to put them
open-minded.
inside insurance. What does insurance buy us? If we buy insurance, Jesse.
It buys protection. It buys coverage. It buys death benefit.
In life insurance, it buys death benefit, of course. It buys protection and coverage and all the other insurances that we all have. And that's cup 3 over here. So we put in some premium, right? That pennies buy their dollars. And so we've got that in the blue cup, cup 3. Now, most insurances are going to expire or the item is not going to suffer a unnatural loss to us.
It's a big if.
However, there's something big and different about life insurance. What is that about life insurance that's different than property and casualty insurance?
Well, as Chris, who's tuning in from the Dominican Republic, would know.
Oh, what's up, Chris? Life
Right.
180.
Giving
That's a
shout
great
out.
follow, ladies and gentlemen. That's a
Yep.
great follow.
Lots of great information. The passing with life is certain. We're certain to die. We're certain to pass.
That's true. So if we buy whole life insurance, it's guaranteed payout. That's the point we're trying to get to. Your dollars turned into their dollars. Your pennies turned into their dollars. Dollars make sense over here. Lots of them. And your family's going to be able to get that income tax free. It is a legacy. It's a net profit that is going to come at the time you die. It's a gross profit. Your family's just going to get the money. And because it's guaranteed, there's an ever-increasing equity value, cash value. Cup number 2 is, did you see where I got it from? A lot of people miss that when they're watching us out there on the tube, whichever tube you're watching us from. Cash value is how much leverage we can get out of this. This is gross for later. This is net now. We haven't paid for everything yet. The insurance company is still taking a risk on us. Cash value is the part that's no longer at risk. So the insurance company has a provision in the contract that says you, the policy owner, can get to the money. They must offer you first dibs at loaning, leaning, or borrowing against your policy. Got it? All right, Rudy out there on Tickety Talk says, throw it into the S&P 500 index fund if you have 10 plus years.
Already taking it back to investing.
Hey, now I'll do that with my cash value, Rudy. I'll do it with my cash.
Sure, if that's what you want to do.
Cash value is liquid, leverageable, and income tax free. It's also growing all the time, and I'm happy to have you suggest whatever ideas you think are best when it comes to investing your cash value. But I'm not going to put my money there.
Right.
What do you think about that, Jesse?
What I think about it is exactly what you just said. The ability to be able to do both of those at the same time. We're not saying don't invest. We're not saying don't do something in the market. We're not saying anything against business. You've got lots of options when you are saving and compounding your money while using the cash value for those other things, whether that's investing if you already have a business. Maybe it makes sense to finance your business. That automatically puts you in two worlds. You're in whatever line of business you are, and now you're in the business of financing that business that exponentially increase your profits as a business. If you are a career person and that's what you're doing in that aspect of life and investments appeal to you more, great. Use banking alongside whatever investing that you want to do. So it's not an either nor. You can do both at the same time.
Let's go. All right, Rudy, did that make sense to you? We're not talking about investment returns. That is an opportunity for you. We're talking about your banking system where you hold and place the money at the beginning. Where are you investing from right now? Probably your checking account, maybe even pre-tax dollars or qualified dollars.
Could be.
But we're talking about where we saved our dollars in the first place because we all have to warehouse them somewhere. Rosalind, what's good out there? Rosalind, you have an outstanding text from me, ma'am. Welcome back, but you have an outstanding text from me right now. We need some information from you. Rosalind is a soon-to-be client, Jesse. We're
Awesome.
excited about her, but we've had some hiccups in her paperwork. There's people that take 3 or 4 days, 3 or 4 weeks, or 3 or 4 months. There's just no in between.
Right. I understand. I know exactly what you mean when you say that, for sure.
So Rosalind's getting close. What's up? Looking forward to chatting with you
Let's
soon.
check in with Melissa. YouTube is popping for us right now. So Melissa asks, I'm 44. Is this still too late for me?
Is it still too late for you? What do you mean by that? Was it too late yesterday? Did you get any younger from last week to this week? Okay, Melissa, I'll say one or two things about that. Number one, we're talking about warehousing your money. Where does your money live? And if your dollars are guaranteed to grow and cash flow, if you can see the progression of my cups, guaranteed to grow and cash flow for the rest of your whole life, always getting bigger, always income tax-free and usable. Jesse, I have a question for Melissa.
Okay.
Then does it matter how old you are?
Not if you're still using money, right, Melissa? Not if you still have plans to buy groceries, take vacations, put gas in the car. If you're still going to be using money, this applies, yeah?
Yeah.
Age is not a factor.
We do understand what you're probably thinking.
Of course.
And you're probably thinking about insurance, which is a valid piece of the puzzle. However, we're talking about cash flow, always growing and going forward for you. So that is why we answer it that way. You're thinking of it in terms of insurance, which is a legitimate question, so we'll answer it. Jesse, she's 44.
Yep.
What do you think?
I think it goes in line with this other question that I'm seeing from Country Life on TikTok. They go together. She's asking about her age. Here's somebody saying something about, well, what about if you're on Social Security income? Listen, we all use money. What we teach people is to be able to save it and spend it at the same time. Whatever that dollar amount is, whatever your age is, whatever's appropriate for you, what we suggest is that you watch a full presentation on this idea, right? Link in the bio. Line up a one-on-one consultation call with us where we can talk through, okay, here's your age, here's your income, these are your cash flows, etc. Whatever that happens to look like for you, come up with a custom plan that fits all of that. But at the end of the day, no matter what your income dollar amount is, no matter what age you are, we're all using money. What if you could keep more of what you're going to use now for the rest of your whole life?
Is that helpful, guys? We're beating around the bush a little bit because we know what you're thinking, but what you're thinking is not cash flow, increasing and leveraging cash flow. Your age is always going to be a factor in insurance. Is it going to mess with your Social Security? No, it's not going to mess with your Social Security. This is life insurance. Remember what it is that we're utilizing. We'll come back to it if you ask us more questions. No problem. Appreciate them. Sam says, what's the difference between a Roth IRA and whole life insurance? Well, one of them is insurance and one of them is an investment tool.
Yes. Risk, in a word. What's the
Risk?
Roth going to do? I don't know. I know what a guaranteed, legally binding contract does when I own it as a private piece of property.
Sam, another question for you. If you like our answers, by the way, give us some love out there. Can we have some love? Can you double tap that screen for us? Pop, pop, pop. You like my origami? Even if you hated the answer to my question, but you like my work, my handiwork, my craftsmanship.
It's good craftsmanship.
Thank
Natasha,
you.
do you have any
I
questions?
don't know who does that. I wish I knew who was giving me the likes. Okay. So, Ring Jeff. Ring Jeff says, just like with retirement plans, it's never too late. The disadvantage is not having started sooner. Right. We cannot restart a compounding and growing cash flowing machine, partner. We cannot restart that, but we can start today. The Chinese proverb says that second best time to plant a tree is today. First best time already came and went. Appreciate those thoughts. Can we get a couple shares right about theirs? On your screen, let me know. Am I pointing in the right place? Put a 1 in the chat or a thumbs up. Am I pointing in the right place? Can you give a share right about there to all your friends and family? Love it. Even on YouTube, we're getting some loves, likes, and
I see
hearts.
it.
Sharon, we got a little something.
Yeah, that's
out
what
there
I
for
was
Sharon.
seeing. So Sharon has a question. Love it. What if I sell a piece of property and put that into an insurance policy? I personally don't know of a better place, Sharon.
Natasha's probably wondering that same question.
Okay.
She's an investor.
Okay, gotcha. Okay, so so for me, I'm from North Carolina, pretty rural area. I've done some raw land deals. So if I need access to capital for an earnest money check or what have you, I use my private banking system to be able to do that. When I experience profits, where do I want to amass that capital? Where do I want to compound it? Where do I want to grow it? Where do I want to protect against inflation with it? I mean, there are lots of reasons why I would say this is the ideal asset to put your capital in. So if I'm selling a property and getting profits from that, I want that to be able to compound for the whole rest of my life. I'm going to put that into one of my policies. Great
100%.
question. Great idea.
So both Jesse and I have gotten very serious and have multiple policies where we save our money inside of. We're probably both, I know that we are in our household, we are spending the money that is necessary in a 60-day, 90-day, 120-day type of cycle. The rest of our reserves are saved and pooled inside life insurance.
Yep.
We borrow against the equity value or cash value for our expenses, but we like to pay ourselves first. Have you ever heard that term? Pay yourself first. You probably have. We all read books on that. Where'd you first hear it? There's kind of a universal American thing and book out there that everyone talks about when they hear pay.
Yeah, I don't know what anybody would say personally other than Robert Kiyosaki's Rich Dad Poor Dad. That's where I first heard it.
Yeah, I think the same thing for me. So that came out in 97, I think. We just passed 25th anniversary. Became the #1 best-selling business book or whatever, something like that
Personal
of all
finance,
time.
yep.
Personal finance. And the idea of pay yourself first is introduced and very popularized in our 21st century information age through his work, Pay Yourself First. I'm sure he didn't coin the term, but he popularized it with his work. And we, ladies and gentlemen, just might have introduced you to where that makes the most sense.
Mm-hmm.
That's what we're trying to help you understand here. We're not investing first. We're not putting our money at risk. We're paying ourselves first because this is a guaranteed growing, personalized, private contract with your name on it. So that's where we put our money first.
There was an interesting question there a second ago on TikTok. I can't remember who it was asked it, but they asked, have we heard the term funny banking and could we speak to that? I mean, I know what I think of. It's just a couple of comments up, maybe a little
Jim, right here from
okay,
Jim.
Yep. I know what sticks out in my mind. I don't know if I've heard that specific.
Funny banking.
Well, I just want, or here's what I wonder then, Jim. What I wonder is if you've come across the notion of fractional reserve banking, meaning the concept that banks are lending out multiples of what they actually have. So I had an interesting bit of feedback this week. An individual had a check for, a reasonable amount of money that you'd expect a bank to have. It could have been somebody like Sharon, goes and closes on a deal, walks away with a bit of profit, went to cash that. Bank said, nope, can't do it. Sorry, you'd have to schedule that with us if you want to cash this check. So I don't know. You can let us know, Jim, if that's what you mean by funny banking. I mean, we are seeing some banks fail, recently. They don't have the money on hand that they would like us to think that they do. That's just yet another reason why this, in my opinion, a properly structured whole life policy from a mutual company that pays dividends is the ideal asset. This save and spend system, as we talk about it, these mutual life insurance companies actually have the cash, actually have
They have
the
to
money.
pay claims. Those dollars are not able to be fractionally, it's sound money, meaning that they cannot loan things they don't have. So it's all there. D. Riley, what's good? All right. D. Riley says, Matthew, hold on. We got a hater, though. So let's.
I saw that one, too.
But I missed what he's
I
responding.
went to the genuine question first.
Michael, got it. Why pay for death benefit, which lessens growth, because that's life insurance has that automatically, and also gets less than market returns because it's not an investment for the 50 millionth time on TikTok today. That's all. It's just going to keep coming up, but we're here to educate, and most people are thinking like we were 10 years ago, and that's why they ask those questions. So keep them coming. We'll answer them. Double tap if you like, love, or learn something, or you realize, they're speaking some truth. Okay, how do you calculate the growth, D. Riley asks. We don't, and we don't have to. The insurance company has guaranteed the growth of liquid cash in the paperwork from day one. It's the worst it could be. That's sans dividends. That's without you utilizing it as a bank. It has to be at least what they guarantee on the paper. So it's like asking, hey, how do they calculate the death benefit? Lots of algorithmic and actuarial science. Okay, they price the product, they guarantee the benefit, and then they cash flow the equity that is paid off. It's very similar to the way your house is calculated, except your house, in its amortization schedule and payoff schedule, the house is your physical person. Mm-hmm. So it's calculable, but it's different than you and I calculating it. That's all. because they'll have to guess at things like your mortality. So, all right, can you guys look at my policy as a second set of eyes? Happy to do it, D. Riley. We did it I did it last week. When's the last time you looked at somebody's policy?
I don't know if I could pinpoint it to a day. It's just a normal step in our process that if you already have something, we offer to look at what you already have, of course, and just read it to you. I mean, we're just going to...
We can read it to you. We can help you decipher it, tell you where to look, tell you what to look for. We're building whole life insurance policies from mutual companies for the cash. And if you did not get your policy specifically built in that way for that purpose, don't worry, it's not built that way. Nobody accidentally got a whole life policy. Maybe in 10, 15 years, because more and more parents are getting them on their kids, and their kids won't really know what's going on. But we'll help you understand the growth, the type of company, whether or not you're participating in dividends, and, of course, liquid cash. We got you. So get on our calendar. Click right here, The Banking Bros. If you go to our regular TikTok channel with our regular TikTok posts, you're going to see a regular TikTok link. And that link, saveandspendsystem.com, saveandspendsystem.com, is going to get you where you want to go.
I'm curious who the friend is. Are you the friend, or am I the friend for that one?
I have a feeling that Cher says you are the friend.
Awesome. Love it.
I think she's probably saying, I have a +1 today. That's
Love
my
it.
thought.
So I want to get to Sharon's, but I want to get to Natasha's first. So Natasha, continuing with the real estate questioning. Love it. All right. So Natasha, your question about real estate investing in mind. If you already have an established policy, if I'm looking at what you're saying here and reading it well, and you can let me know. If you've got an established policy and you just put in $10,000, but it already had some cash value in it as well, and you come across a deal, how quickly can you pull out of it? It sounds like, and how often can you do that? So essentially, as long as there is cash value in a policy, you can make policy loans. Doesn't matter if you make, one a quarter, one a year, one a month. If there's cash value, you can make a policy loan, right? And that's, again, the ideal place to have capital building up, because it's working for you, of course, in the policy, providing that death benefit, providing the cash value and everything that happens by putting capital in a policy. But it is accessible to you for a real estate deal when it pops up and becomes available to you, right? So, of course, just give it a couple of business days, because you can do a direct deposit from the bank would be the quickest, of course, instead of a paper check, so that you could take advantage of that type of a deal. Let me know if that's helpful.
Yeah, so your dollars are going to be liquid immediately, and that just means as fast as money moves, as soon as the check's clear, you've got cash value that's liquid. Going to be able to come back to you as fast as you can get to it, as fast as money moves between organizations and institutions, 3 to 5 to 7 business days, unless you ask them to wire it. So, yeah, all of that is possible, Natasha, just like working with other financial institutions. But it's just guaranteed,
awesome.
Liquid. You don't have to spend lots of money on paperwork or fees or anything like that. It's yours. It's liquid. Good question. Okay, I'm going to go here real quick, and then you go down to YouTube. No, go to YouTube. I think
Sharon asked it a little bit back. Yeah. Great question. We have addressed it once. Let's just do it again. We're seeing this again pop up, just like the investing question. What would be the initial minimum, regardless of age? You put your age out there. It doesn't matter. 29, 49, 69. What's the minimum? We begin by asking you, what do you think is an appropriate amount of premium? I mean, if you knew that you could grow and compound your money for the whole rest of your life, how much do you want to put in? And can we have a conversation about what your cash flows look like and your plans and how you see yourself using the policy? Absolutely. And we want to custom build it for that. But it begins by you figuring out what an appropriate amount of premium is. That's my starting point. I can always put my insurance guy cap on and say, well, what's your age? What's your gross income? And I can give you a metric, but I just don't think that's the place to start when talking about banking. But we could do that.
With banking, I think the answer is you like deposits. That's why we added this second word here, so we can think of it in a positive light, because we all love to have money in that bank. So why don't you do it right here? That's all we're suggesting. Okay, back to TikTok. I know you guys are probably a little bit more antsy for quicker answers, so appreciate you sticking with us. Here are a couple different things.
IBC is the truth.
Matthew,
you're right.
Yeah, insurance dividends are different than stock dividends, correct? Insurance dividends are income tax-free. They qualified as return of premium, which is real crazy for us, for the good of the policy owner.
It's IRS language.
So what they're doing is saying, hey, we had profits because not everyone died, and now we're going to share those profits with our mutual ownership, and that's me and you. We get to be owners, voting members, kind of like a credit union type deal. Okay, so that's what's going on there. Another question or two. Danette says, is this whole life? Whole life is what we propose. We like the most, and the only type that Nelson Nash recommended for the use of infinite banking. When you think about insurance, there's term, temporary, there's permanent. And permanent has a kind that is really both permanents are misclassified, first off. One is universal, and you've heard of universal, and there's several different variations of universal. There's also whole, and that's the kind where the cost is fixed. The cost is fixed, the growth is fixed. The growth has to happen. It's going to get more liquid. That's the kind we love to talk about here. It's probably the one that's most misunderstood, but universal is pretty poorly understood as well. But permanent is hard to get and grasp for most people. They're way more familiar with term. Y'all stole my moves. Even the guests can.
I was trying to understand that.
I'm just shouting it out because it sounds funky, but I just don't know what it means either. Okay, Sharon, are you good out there? You good on YouTube? Remember, ladies and gentlemen, you can follow us on YouTube. On YouTube, we're the Cash Compound. And at the Cash Compound, we have a library of materials. We got podcast episodes out here for you to listen to while you're at the gym or driving. We have got video stuff like this, AMAs, Ask Me Anything. Thursday, 3:30 Eastern Time. We're live every week. Sometimes we miss a week or two, and we always let you know because we talk to you through our newsletter weekly. You can sign up for that by clicking the link in the bio, as well as our Facebook group. Join Infinite Bankers, plural, Infinite Bankers Facebook group. We control that one, and we'd love to talk to you there. More questions for us? Comments or concerns?
You're welcome, Sharon.
Put a 1 in the chat if you have
a
life insurance. If you have life insurance of any kind, put a 1 in the chat. If you do not, put a 2 in the chat. Just want to know who we're talking to this afternoon. Hey, I have it. I don't have it. I want to ask you a few questions about it. My work gave it to me. My grandma bought me some Gerber stuff. I bought a term when my cousin came out of college. He made a list. He sold me term. 2, I do not have life insurance. I have car insurance, phone insurance, fire insurance. I don't have life insurance. What would you say to people who put a 2 in the chat? They don't have life insurance. Give me your opinion on that. Sharon, Mauricio.
Well, what I would say, okay, Sharon, okay, Mauricio, good name, is think about the comparison. Because what J.D. asked is, do you have insurance on phones, cars, homes? And I do, and you probably do too, right? But the only reason we have homes and cars is because of our lives. So what I would say is it's a misprioritization of what's important. What actually provides us with the homes and the cars is
go easy on them, Jesse.
Us. So that's just real talk, man. Who doesn't have time for sincere conversations?
TikTok.
Okay, see ya. I would say the starting place is what provides all of that. You know, whatever it is that you're doing out in the wide world, whatever value it is that you're providing, thank you, and protect that first, right? Protect the cash flow that you're going to want to have over the rest of your whole lifetime. Provide yourself with a death benefit, you know, give yourself all the advantages from this save and spend system and finance the thing that it is that you're doing then, you know? So we buy protection on the cars and the homes. I just think we should start with ourselves.
Now, you use the F word, Jesse, finance.
Mm-hmm.
I did not understand that when I started Infinite Banking 9 years ago.
Okay.
Yeah, I was always using cash. I was a Dave Ramsey type spender. Give me some envelopes and some cash, and I'm ready to go. Maybe I'll buy a Visa gift card, and I'll give my wife that for groceries. So I did not understand what really you meant if you were telling me 9 years ago, finance it. If you can be in control of your system, you finance it. You control the bank. I had no idea what that would have meant.
Okay.
Not a clue.
Well, you got 2 options, okay, for everything that you ever do. And I don't know you, right, but I know that you've always done those 2 things your whole life. You've either done that cash method. You waited until, right, you waited until you had enough set aside, wherever you put it, under the mattress, hole in the yard, savings account, in the bank, whatever. When you had enough for what you wanted to do, you spent the money, got the thing, money's gone. That's one way of financing. And when you want the next thing, the next car, the next vacation, the next home, the next whatever, you got to say, I mean, the time goes by, right? The dollars are probably weaker because of inflation. Lots of variables that I think you should consider about finance. and then you got it and you spend it. You got the thing, but the money's gone. So that cash way of finance is one of the options. The other option is you don't have the money. You ask somebody else for permission, okay? And they give you the money on their terms and conditions. They let you know if you even qualify, of course, right? And then they have all these terms about, well, you're going to pay us back this interest. So now you got to spend all the money that you otherwise would have with cash plus interest on top of it. And you got to dig yourself out of that hole. So whether it's cash, whether it's credit, those are the two conventional ways of finance. Here we say do the same thing that you're already doing. Finance things, okay? Just don't do it the conventional way. Put some money somewhere. We say private piece of property, premium in a properly structured whole life policy. When you put it there first, it automatically creates death benefit. That's legacy money for your heirs, your beneficiaries, the next generation, etc. And because it created that death benefit, it also made cash value available for you to go out and do the thing that you were going to do anyway. But remember, your money's compounded for the whole rest of your life now. You got this death benefit for the worst case scenario, and more cash value is going to build in this system over the rest of your life. Long answer, but that's it. Cash, credit, or compounding.
Love it. Okay, so 2 was a shout out to people who, wait, what was 1 again? 1 was I have life insurance, and 2 was I don't have it at all. Yeah, I don't have it at all. Okay, those of you who have life insurance out there, do you have term or do you have a permanent, a universal life or a whole life? Do you know? Do you even know? Go ahead and throw that in the chat. Remember, ladies and gentlemen, you can always get into a one-on-one consultation with us, and we have lots of videos, lots of great TikToks waiting for you right here. We go live all the time helping people understand the save and spend system, how to save your money and spend someone else's. It's possible. It's proven. It works every single time, and it cash flows income tax-free while it grows. Wild. Okay, so Crypto Posse has Index Universal. Okay, Bridge has both. When you say both, do you mean you have whole or universal? Because I'm assuming you have term. Octave has whole. Felicia has term. That can be said a couple different ways. Felicia, probably not Felicia. Tell us. You have to explain to us how to pronounce your name by typing it out.
How would somebody even type that out?
I ask people that all the time on here because people got the craziest names or they got the crazy. I'm like, how do you say your handle? You know, that's obviously something, and I don't know how to read it. So
right.
Okay, so I had term coming up too. When I was 22, 23, 24, my buddy got out of college, made a list.
Oh, so that was a real story when you were saying.
Oh, 100%. Everybody got sold. No, 100%. Tell me how you got your term. Tell me how you got your term. You nailed it, Octave said. Okay, like the Friday movie, bye Felicia. Okay, bye Felicia. It's Felicia.
Got it now.
Okay, Felicia means that she's a woman of color. Are you a woman of color?
Does it?
I think it does.
I have clients that are not.
Brings people a certain type of person here to us. I'm telling you. Maybe not. I don't know. Y'all let me know. Myself? Bridget has Index Universal Life. Okay, so we bought. Yes, told you. 100%.
Okay.
Look,
I'll
Elon
quit talking
Musk,
about your assumptions.
Musk,
it's fine.
The Starlink, Big Brother, they know what they're doing. I don't know. The government of China, whoever is letting us be on here, we appreciate you. We're educating the masses. Okay, I knew there was a sister out there. Okay. So what we did is we bought term back in the day, right? 25 years old. I'm buying term off my buddy, right? He says, do you love your family? I said, I don't have one yet. Let's put my mom as the beneficiary, but I do love her. It's going to cost $20,000 to bury me in this town. And I was like, that's not a burden mom should have. So I'm going to get it covered with several $100,000 of life insurance term. It'll term out when I'm 55. Yes, I was 25. 25 to 55, 30-year term. Okay? I did not learn about whole life as a banking system at that time, but I did learn whole life as another terrible investment at that time. Dave Ramsey told me, stay away from it. You'll go to hell when you die. Your mom gets the money, but you burn in Hades. Okay? That's what he said.
Okay.
That's what he said. I'm telling. Ask Felicia. She knows. Okay? Okay, we got Maisha in the building as well. And now, am I saying it right? Am I saying it right, Maisha?
Could be Maisha.
Maisha or Maisha.
I'm just being facetious now.
He's getting nervous. He's getting uncomfortable. If we saw all your faces, we'd probably both be uncomfortable. Very good. She just said yes. So
it is always interesting if we have a client consultation call and we do a Zoom call
Right.
I'm seeing them for the first time, they're
Yeah.
seeing me for the first time, perhaps. It's
and
interesting.
they're like, "What? You have a beard?" Is that what they say?
No, I've never had
No, they're
anybody
talking about
say
his skin
that.
color. Okay, got it. Moving on.
Everybody's always smiling, though. That's what I can appreciate is
Yep.
conversation starts out with a smile.
Very good. Okay, so Whole Life has extra properties because it's like we're buying. In real estate, when you buy, Natasha is an investor. When you buy, there's an ever-growing, increasing cash value. Sharon knows she's looking at velocity banking. By the way, every Thursday in July, Sharon, mark it down. There's going to be a special set every Thursday, starting with July 4th, the holiday, where we're doing a co-sponsored event on these Thursdays. So all you got to do is stick with us with Denzel Rodriguez. Denzel Rodriguez and I are going back and forth, and we're going to be talking about minority money mindset. It's the cash culture connection. We're going to connect the culture, the mindset, the history. He's a velocity guy, very good at that. He's got some banking policies as well. We are the banking bros here in the Cash Compound. We're talking about Whole Life. Be ready in July. Mark it down. It's going to be great, okay? Everybody, be ready for that. Every Thursday in July. Yes, you've just started up the Velocity Banking to free up funds. Very good. And the reason she has funds is because her mortgage is partly paid off, paid up and paid for. Okay, so she could leverage those dollars with the bank's permission. She can go borrow against her house's equity value, HELOC, lines of credit, things like that, and then free up the funds and make them work for her. I think that's an interesting idea. A lot of people have had success with that, doing it strategically, because these dollars aren't doing you any good unless they're in motion. And if you put these dollars in motion, the velocity banking style, borrowing against your home or some other equities out there, you're going to be able to maybe fund your policy or get into an investment opportunity, buy another house, whatever it is you want to do. And I think that's what Sharon is working on. Are we making sense out there to you, ladies and gentlemen? Maisha, do you have life insurance? Put a 1 for yes, a 2 for no. Then I'm asking you another one. You could just put yes or no, I guess. But everybody, if you have life insurance, yes, I have some type of life insurance. 2, no, I do not have life insurance. I don't love my family that much. That's why I'm here, because I'm learning to love them. And at least I want to protect them, if not cash flow for myself. The servant, what's up? Maisha has it. Very good. Did your job provide you the life insurance? 1 for yes, everybody out there. 2 for no. Did your job provide you the life insurance that you have? It's the only life insurance you have. You did not buy it on the open market. It was provided to you in closed circuit captioning TV.
That was definitely my case for a while. Just had whatever I had through work.
Okay. Now, there's some disadvantages of that because you said for a while.
Yep.
You said for a while.
Because I'm no longer working there.
Because you're no longer working there. So do you still love your family?
Yes.
Even though you're not working there anymore. So there's the protection goes away. Okay? Everybody can probably understand that. And in most cases, in the military and some jobs, you can take it and you start paying it for yourself. But the coverage goes away, obviously, if your job is providing you something. And your job tends to not provide you all of the bells and whistles that it does on the open market. Like it might be accidental death and dismemberment, meaning that whatever your salary is, you lose an arm, you can't work the job anymore, they pay you double the salary or a one-time payout or something. You don't even have to die. It might even be some sort of calamity type insurance, like you lose a leg or you can't do this job anymore. While you were working, you got hurt, injured. Dismemberment. Accidental death and dismemberment. So you lose your arms, they'll still pay it out in those types. But we're going to buy insurance, the kind that comes with us for our whole life. And because of that, we're going to be able to earn equity. Sharon knows it, and now so do you. These dollars, cash value, cup to the green cup, are liquid and leverageable. Okay? You can take them. That's what I mean. And your dollars, the ones you put into the policy over here in the red cup, are still there, still earning, still having guarantees for you, and kicking off a separate pool of money that we can work with to become our own banker. What's up, Sweeze? Okay. Dennis, please let people know if you're a convicted felon, this ain't going to work. It is going to work, but it may not be your body. Okay? I want to say a positive before I confirm the negative. There's a lot of adverse effects to having being formally convicted in a felony charge. Terrible. And life insurance is just one of like 400 in our state. There are 400. I work with a nonprofit organization that's trying to ease up the burden that these people, most of the time who've already served their time, coming back into society, and it's like serving their time wasn't enough.
In a stable job, stable family situation.
Trying to have all sorts of benefits like the regular old-fashioned type of person who is a citizen, but because I was formerly convicted and served my time, I'm not really free.
Yep.
There's a problem there, I think. I have a moral issue with that, so I'm with them out there. But if you have a felony, okay, not this convicted felon stuff. That's not how God sees you. If you have a felony, okay, you are not a felon. That's my opinion. You can still do this process. We're working with someone right now. He's in Knoxville, Tennessee. He has a former felony charge, served his time, is out here doing real estate stuff in Knoxville, owns a couple multifamily deals. Really great dude. He can't get the policy on his body. You're correct. He's got a couple charges, and some of them are 20 years old. But he has daughters. So he does do the banking thing, and we're almost through his paperwork to get him his policies that he owns and controls, but are on his daughters' lives that continue to grow in cash flow for the rest of their earthly time. He can own it and still practice this. Dennis, appreciate you. Okay, Sweeze says, I need to get life insurance. It lapsed, so I am interested. Okay. Click the link in the bio.
Yep.
Let's get in that conversation. Jesse, you taking calls this week? What's up?
Yeah, I'm taking calls
People
this week.
need you,
I was just thinking about another conversation that I had with somebody, and they went through the process, and they weren't able to get a policy on themselves too, Dennis, because of prior record, right? And same thing, has family. Okay, next move, and you know this from having these private consultations with us, is we're really good about looking at money inefficiencies in your cash flows. We're really good about strategizing through these things so that you can save and spend your money at the same time. Next solution was, okay, you got a daughter, policy on the daughter.
Policy on the missus, policy on the grandchildren.
You can build benefit instead of just having a death benefit. I mean, it'd be ideal. It'd be great for you to have a policy on yourself. But the next best step is, that family member is probably who you would have designated anyway to receive this benefit. Just start building the benefit. Just start building.
I love that.
I
love the way you worded that. Love it. Dennis, is that making sense to you? These dollars make sense. So let's keep them in the game. Dennis, did you try to work through us? Was some of the hiccup you didn't have another person in your life you could work with? If you don't have a family member to work through this, Dennis, with, just in case you were trying to work with us, bro, go into business with someone, preferably someone who does not have a former conviction like that, so that you can team up with them and then buy it on them.
Yep. And we're getting Sorry.
Go ahead.
I was just going to say, we're getting another couple of questions about things that we're not going to be able to answer specifically because we're not underwriters. So somebody's asking about a heart condition. Somebody's asking about a misdemeanor. Listen, if we can ask a couple of questions when we're having that consultation.
Yeah, everybody's asking all these questions.
Right, I know. And I'm trying to just stay ahead of it.
Right.
I'm just trying to stay ahead of it. Listen, we're going to talk about how you can implement this concept in your life. If we know right out of the gate that you had a heart attack last week, we probably won't apply for you. Right, we'll apply on another person that you could be the owner of the policy, and someone else will be the insured person, the person that you have an insurable interest with, like that wife, like 100%. That child, and everything. Right, so you can still do this. You could be the owner of the policy.
How about them apples? You can still do it. Double tap on the screen if we're helping you guys out. A misdemeanor is not the same thing as a felony, so let's start. Let's try.
Yep.
Okay. Your husband has stents in his heart. Can you have one on him? I cannot. He's your husband. You might be able to. Let's ask the insurance company. Let's get the policy going. All right. We don't know all of that stuff for sure. We do not do the underwriting. We make a case. It's literally called that in the insurance world. The agent or broker, people who set them up. There's always a Jake at State Farm or a Flo at Progressive. We submit a case. We make a case by filling out the paperwork and saying this person you should consider for coverage. They may say yes, no, or ask us questions. Why should we? We're not exactly sure. What do you know about them that we don't? And we can make that case. Because we do policies for infinite banking at certain companies very extensively, they actually listen to us and we can talk to them. Just in case we're trying to put somebody through who has a questionable situation going on. Okay. Billy says, how immediate does the family member have to be? Not sure, Billy. Let's talk about it.
Not your fourth cousin, unless there's some kind of
fourth cousin's going to be too far out of the game.
interest.
They're going to figure that out, okay? They're not going to let you do that. You have to lose money when they die. That's how close they have to be. That's the point of having insurance, right? We have coverage or protection because we're going to have a loss when the thing goes bad. The car, the house, the phone. Life insurance, when they die, would you lose money? I know that doesn't help you very much. That's why we have to talk through it, because the insurance company is going to wonder that. Also, they don't have to be a family member at all if they owe you money. If you have insurable interest on them, it might mean because you're in business or you gave them a loan and there's paperwork on that loan. They're an employee. So, Billy, hire your family. Go into business with your family. They now qualify. They don't even care that it's not, they don't care that it's your family member. Insurable interest that will trump that is, oh, I'm in business with this person. Okay? Hopefully this is helpful. Let us know by sharing this content. If you liked what you've heard so far today, go ahead and ask questions out there. Anywhere you are. What we do is we walk and talk you through the infinite banking concept. Share right about there. That's what I was saying. Can you guys share? If you've liked what we've answered, asked of you, or interpreted for you. And we can get in a free consultation for you, that free cash consult with our coaches. We have several of us around here that are answering the phones this week if you'd like to have a chat. We've got a video we want you to watch, so click right here to get to it. I'll put it up on the screen so you know which page you're looking for on TikTok. You can still click that link and hear me talk. Jesse and me, we are still here talking, but you can go ahead and find that saveandspendsystem.com. We've gone ahead and put that link in the chat, of course, for our friends on YouTube. Our YouTube channel is The Cash Compound. Go ahead and follow and like over there. What just happened? I have a TikTok that's uploading on my personal account right now for the last 40 minutes. And it won't let me switch over.
No idea.
Okay.
But we've still got a few minutes for more questions. Ask me anything.
Jesse, why don't you talk a little bit more about your personal journey and how many policies you have?
Okay,
what
sure.
You use them for?
Okay. Just this past week, paid premiums on our 2 oldest policies.
Okay.
So one policy, 9 years old. One policy, 8 years old. So I saw a presentation just like we're encouraging you to check out. I saw a presentation just like that one right there in 2015. Had my mind blown, said, yep, I want to save and spend my money at the same time. That sounds fantastic. Asked a lot of questions like you guys have been asking questions, had that consultation call, funded that policy, got it started. That 9-year-old policy is my favorite one just because it's the oldest one.
There you go.
Right? It's not even our biggest one, but it's my favorite one because that's when we actually got started. We went bigger as we went along. Second policy, the policy on my wife, it was bigger. But we just recently paid premiums. All right, so check this out. And listen, these are custom built. I don't necessarily want to get bogged down on the numbers, but I put in an amount of money where I made a subsequent policy loan afterwards and got more out than I put in.
Let's go. Ladies and gentlemen, did you run it back, Jesse? They didn't hear it. They didn't hear you.
Yeah.
They ain't listening.
So I mean, I paid, the premium on that 9-year-old policy, and I got more in a policy loan. Okay. And of course, remember, it's like all I've seen is the death benefit go up. I told you, I just paid a policy premium, and I've just seen that death benefit go up and up over these past 9 years. Right. And because I did that, it created, in this 9th year, more cash value for me to be able to get to than I even paid in premium this year.
How about them apples?
It's a good day. So like when people are talking about, what's the minimum? I'm like, I wish I'd have started bigger. I wish I'd have started sooner. Like,
There it is. Got a thumbs up out there.
Yeah.
Okay. Appreciate you, Maisha. We're glad to help. Hopefully you watch our video. You're going to watch that video. If you haven't, please do. You need permission, Maisha? You may. All right. Public enemy number 1. Who was public enemy number 1 in gangster folklore of yesteryear, Americana?
Big Brother?
John Dillinger.
Okay.
Public enemy. And Johnny Depp played him in that one movie, right? Okay. All right. When you borrow against your policy, do you pay it back with your paycheck? You can pay it back with Jesse's paycheck if you want.
No,
right?
you can't.
Save your money, spend someone else's. Okay, so let's borrow against this policy. Okay, let's go ahead and buy something. Public enemy, what are we going to buy? We got $150. I don't know if that's $150. It's a very small loan. Wouldn't necessarily suggest that. Let's say it's $150,000. Give us something big time. What's up? Money Man Myers is a great follow. Ladies and gentlemen, if you can go follow this man, he goes live every morning talking about principles to become financially free. I like to watch him all the time. Hopefully he's seeing us. TikTok lies to you. He's probably not watching right this second, but if he is. All right, Billy, property. We're going to go buy property, $150,000. Okay, so you just took a loan from a bank, Billy. You own the bank. Yes. You own the bank. But we took a loan from a bank, the bank, your bank. You bought the property. You control it. You can go ahead and till the land. What do I say at that point? Till the land. Okay, not me.
Perimeter
I'm
fence
gonna have
first.
Perimeter fence, right. All right, got to get the
Defenses.
bunker. Right, got to get the Spanish are coming. Right? Okay. I'm not doing any of that. I'm gonna put a resort on it. Family fun entertainment zone. That's what I'm gonna put. Okay, on my property. But you do what you want to do with this property. You've bought it. It's yours. Let's say that's clear. That deal is separate from the bank. But now, Billy, have you always paid back a bank loan? Because you took one. Have you always paid back a bank loan? Obviously, the answer is yes, but I can wait for you. You've used future cash flows, plural.
Yes.
You see how I added that
I
in?
did. I love it. Keep going.
You didn't think I was listening to him earlier. I was listening.
No, yeah, I think it's caught on. I think you might have adopted it.
I might be on his level soon. Okay, very good. So let's pay that back with future paychecks or other people's money. Maybe that property has renters on it, right? Has other people paying for it, and it should go back to the bank, right? You should repay $150 over time or all at once to this plus interest, right, Billy? Plus interest. Let's say there was 10% interest on that. That means $165 is coming back, right? $15,000 extra dollars. Yes, that's how bank loans work. Except you own the bank, so that extra $15,000 actually, in our scenario with the cups, goes here. Now, Billy, reminder: your money that caused this system to work has never left, has never been in jeopardy, has never gone backward. It's continued to earn.
Right.
But you borrowed against the pool that you purchased, net liquidity, cash value loans. It came back from you or from other people, right? It's property, so maybe you do have a renter on it. And the interest goes back to you as well. And interest, therefore, going inside this cup, lifts the benefit and pool, lifts, therefore, the cash value, because cash value is just equity of the big pool. You got it? Let's get it.
Great
All right,
question.
Billy, did you get? Yeah, I love the way I could visualize that for you, but hopefully you got it.
Yep.
Does communication really happen, Jesse? If I'm flapping, but they didn't understand.
Yeah, no, I understand. Refill the reservoir.
Well, I'm just saying, I don't know. I mean,
Yeah,
we
yeah.
had this debate in college
Hopefully he'll come back and give us a follow-up comment. You refilled the reservoir and put in that extra.
Billy got it.
That's what
Very
I'm
good.
talking
Billy, 100%. So you use your future cash flows, your paycheck, you come up with the payment terms. It's an unrestricted loan. It's unrestricted loan when you take it. That means there's no paperwork other than how much money do you want. There's no repayment schedule. And so you or yours can pay it back, right? You got it. Love it, Billy. Hey, we'd love to hook you up. Are we already on a calendar somewhere? Billy, let's go ahead and get you on Jesse's calendar. Dex, and can you increase the benefit later if you have more money to put in? That's an interesting question, and the way we build policies has an interesting answer.
Yep. So the answer is yes. Can you increase the benefit? Yes. But I would say that's even separate from if you put more money in it. So the death benefit is going to grow just because of the regular scheduled ongoing premiums that you pay on that monthly or that annual or whatever basis you pick. The death benefit grows. Okay. And then, of course, the dividends that the company gives goes into the premium. That makes the death benefit go up. But the second part of your question right there of, well, what if I put extra money into this save and spend system? Yeah, if you put more money in, and we do build them where they have that flexibility to accept more premium dollars, even above and beyond your regular scheduled ongoing premiums. And when you do, it puts more money in the death benefit, which means more money in the cash value. So yes and yes.
Ladies and gentlemen, I found it on my personal account, which I won't tell you right now. I uploaded to TikTok, but it's finally uploaded. If you want to follow along with us right here, and you click this link in the bio up here, go up and click this avatar, this little circle, whatever it's called. Go to our regular TikTok profile. This is what it looks like for me. Lots of TikToks to watch there. Put a 1, 2, or 3 in the chat on how many TikToks you're going to watch as soon as we're off. Okay, we want you to learn more and see our creative and dance moves. Jesse sings sometimes.
Yeah. No, I'm not singing.
Okay, and then click a link right here in the middle. It's burned out, washed out. We got a light up there, so it's hard to see. There we go. The save and spend. There you go. Save and spend link right there in the middle. That'll get you on our calendar.
So help me out with that one name pronunciation. Just a couple lines up right there. It starts with a C? Nope, scroll down a little bit. Right there at the bottom.
Chimichanga champ.
Yeah, what's
Chimichanga.
Is that
This man does not get out much. A chimichanga, something you eat.
No, I got you. I just wanted to hear you pronounce it. That's all. Because you were helping me with my pronunciation.
He didn't think I knew. He didn't think I knew.
Ya sé.
He didn't think I knew.
Como decir chimichanga. Ya sé.
Okay. Is whole life 121 common? Yes.
Very
okay.
common.
So
I got him.
Yeah, very normal. 121. We have those. Okay. Used to be whole life 100.
Mm-hmm.
It's still 100 in Canada because you can do this in Canada. If you're Canadian, hit us up. Go ahead and DM us. Say something. We'll hook you up with a Canadian referral. Some people can help you in your country. You can do this across North America, Canada included.
Great, guys.
121, because of people's life expectancy changing, the tables have changed. If you got a whole life insurance policy in 1950, it wouldn't have been 100. Life expectancy wasn't that long. I don't know what it was then. 80? It may have used to go to 80. So if you make it to 80 and you have a whole life, they just paid you the benefit.
Mm-hmm.
100, it matured. Okay, if you make it to 100 and you have a 100 pay type policy, 100 pay, you might hear it called that.
Money.
They just send you the money. They say, happy birthday, here's the money. If you make it to 121 with a 121 policy, happy birthday, here's the money.
Yep.
Okay, very good. Maisha's going to watch all of them. I doubt it, Maisha, first off, but I'll let you watch 12. Okay, as long as you watch 12, that counts. I don't want to make you out to be a liar, right?
Call
All right.
her out.
Tony says, when a loan is taken against the cash value, I love that terminology. Does the interest go to the insurance company? Great question. There's more than one interest going on right here because your dollars are still earning compounding interest. But Tony asked something very important to reflect on. We are being charged amortized interest, what we might call simple interest. Simple interest, as long as it doesn't stay out longer than a year, you're being charged that by the insurance company. Our favorite company withholds the interest before they send you the money, so it doesn't mess up your policy. If they say, they're using it for banking, they're borrowing against this, they hold back the approximate 5%, because I know that's your next question. They'll hold it back. So if you had $100 and you asked for everything, they'd send you 95 is what I'm trying to say. And as you potentially pay that back because you want to be a honest, good banker,
Yep.
they recredit it back to you. So it's still there, but if you do not pay it out of your pocket, that $5 goes to the house. And by goes to the house, if you stay alive, it means it actually came off of this because they owe you money, Tony. There's a couple different ways to look at it, baby. I hope that made sense to you because they still owe you money. They still owe you money, and you're earning while you're borrowing it from someone else. Did that make sense?
I like how you worded that, and I liked your answer.
Oh, did you like my answer?
Yeah.
He's
Yeah.
never particularly said he liked my answer.
Yeah.
But I gave you some nuances to the company we use most often as well, just so you know. You don't have to pay for it out of pocket. They'll just send you a little bit less, the interest. They recredit to you on the way back in.
Tony says yes. Thank you very much. Yep.
Yeah. Cool.
Yeah, keep staying in this book because if you give yourself a true market interest like you would to a bank, it means you'll be paying to the insurance company just like Jadu said, and then that extra, if you heard us talking about paying extra into the premium, just grows and scales this. Let's go to Tanya, yeah? Tanya on YouTube is asking, what's next? Ready to get started? Great. So find the link in our bio or just go right to that saveandspendsystem.com. Okay, that's where you'll see our full introductory presentation. That's where you could book a client consultation call. So next steps are watch that full video presentation and get in our calendar.
Tanya, we're looking forward to talking to you. However, I definitely recognize your name.
Oh, awesome.
Tanya.
Great.
No, I'm not saying. I'm wondering, Tanya, have you been on? We've not talked, but you like
okay,
to
I see
look
what
at
you're
us
saying.
every other week. I've seen you before. Welcome back. Welcome home. But if you haven't talked to anybody, get on Jesse's calendar. Let's go. Chimichanga Champ says, I was told if I make $10,000 initial annual premium payment, got it, love it, it's going to buy you a big old death benefit. I don't know how ugly you are, older, skinny, young, beautiful, but it'll buy you death benefit. I'd only have access to about 70 to 90%. Now, That depends on the setup of the policy. You are correct that it could be anywhere in there, but you don't have access, in the way we are explaining it, to any of your money. We're not going to withdraw anything. Your money bought all this death benefit. You will also have, see, someone is making you think about it from a negative standpoint. You still have a policy. You still have going and guaranteed growth, and you have 70, 90%. Potentially, if that's how it's built, because it could be built for 50%, 40%, 30%, because you said since it's built 70-30. Totally fine. You also have this separate pool of money while your money is still growing. Okay, so that 70, 71, 72, 73, up to 90%, whatever, is a separate pool of money. You've still got a policy. You've still got death benefit. You still got guarantees. Does that make sense? Also, Chimichanga Champ, that's day one. Jesse, remind us what happened in year 9 of your policy premium.
Yeah, I've got more access than I even paid in premium.
Hold on. So not 70 to 90%. Say it one more time.
Right. It's more like 120%.
120%. You got that, Chimichanga Champ? Lots of people want to get started and understand the basics. Love your question. But they're only thinking about year 1. They're not thinking about growing in a business. Growing a business through this bank. It's always going to get better. Your money is going to keep compounding. Remember, next year you will no longer be in year 1. That's amazing. Great. I'm glad you're understanding it today. For some reason, people are getting what I'm talking about.
Yep. Appointment set. Awesome, Tay.
Let's go, Trey.
Trey, thank you.
Trey, it's so small and it's kind of transparent on purpose, but it's hard to read even if it's within arm's length. Okay,
Tanya,
what time we got?
same thing.
About time to roll, huh?
Saw it twice, 11 grands. Yeah.
Yes, Tanya, 11 grandchildren. That was last week or so that you were here, right?
Awesome.
Last week, week before. Welcome back. Let's talk about those grandbabies and let's build a legacy on them.
Mm-hmm.
Okay. If you go live for an hour, it makes you check in to make sure you're really there. And
sure.
We here, baby. We here. Okay, but that's our cue, maybe. Ladies and gentlemen, we go live on Thursday afternoons, 3:30 Eastern Time. Catch us on YouTube, The Cash Compound. Appreciate you guys subscribing. Catch us right here. In our hometown, we've got somebody who has been with us. She's a real estate investor, and she's getting started. We love to see you on our Zooms because sometimes, half the time, we go live with slides. And when we have new material we want to share with you, a new opportunity that we can show you how things work, show you our kids, how we build policies on them, you're only going to see those slides on the live if you're on the Zoom. So register for that event by clicking the link. And third, to our TikTok audience, which is always a random assortment of lots of people, we love you guys as well. You need to click the link in the bio. Yeah. Go here. Click that link in the bio, saveandspendsystem.com, for the full video experience. We have a new video coming out about 3 cups tomorrow morning. Double tap on the screen if you're excited about that.
8 in the morning.
8 in the morning Eastern time. It's 9.5 minutes long, and it's going to walk you through the 3-cup setup without having you to have to jump straight in, or if you have a quick time or you want to show somebody what you're about to do because you getting started but your spouse hadn't seen it yet, your kids don't understand, 3-cup setup is really going to help, okay? All right. Wade says, do you only have access to benefits that match the cash value? Wade, you're combining so many words and so many ideas. I'm going to break it down for you one more time. Wade, let's assume the policy's on you. You have access to cash value, liquid access to the equity. You don't get the death benefit, Wade. You'd be dead. Okay, that's for
the family.
That's for the fam. That's for church, right? Leave them a little something. The theater, the community theater, and the nonprofit. Leave them a little something, something. Okay, you get the equity. Remember what cash value is. It's the net liquid amount that you could borrow against your policy because it's paid up, paid off, or paid for. Mm-hmm. Does that make sense, Wade? And cash value, since it's equity, Wade, think about it. You have a house, you're paying a house payment. The equity must grow into the benefit over time. So there's always going to be more. So when you say only, you're probably thinking about day one. It's always going to have to grow. How much equity do you have in your house? The first payment is what people keep asking me.
Not a lot.
Not a lot. We just started, but there's always more and always more and always more. The death benefit rises in these types of policies, and everyone here in terms of life insurance and liquidity is basically asking me, how much equity do I have in my house the second month? The first month after I pay. And I'm like, not as much as you'll have next month or the month after or the month after. I can't ever borrow more than the cash value. That's what you can borrow, Wade. Cash value is the amount of money you can get a loan from the company from. It is the equity. Can you borrow more than your equity in the house? No. You with me? Do IULs have equity? Yes, over time, but it's not guaranteed to always be there. Be careful. Ricky Lahee says all those first payments just go to fees. Not every dollar of them, but very close in real estate. Very close. Okay. The most liquid is not day one, is what we're trying to communicate. And you already know this because you have houses. Okay. Ricky, 80%. You're thinking about this ratio. Man, I wish I could teach people banking.
Yeah,
rather than
that's what we're encouraging. There was another former question too about what's the point of cash value if you're not going to take policy loans, or if you can only take policy loans. Y'all use money. I use money. What we're saying is you can save yours for the whole rest of your life, grow it, compound it, uninterrupted, and still have access to a growing, compounding pool of capital at the same time.
Mr.
Save
Ricky,
and spend.
You got it? Wade, you got it? Peace, guys. We're out. Mom, come pick me up. I'm done.
Great having you.